Good weekend, all. Ira Epstein, and here we are with your weekend edition of your financial market wrap-up. And this is for Friday, the 31st of May, 2024. I want to thank all of you that took advantage, and there are many of you that took advantage of the sale that we had. It ends sometime tonight. I don't know the time that it is, but it will be done and over with, and it was a huge success. Smart of you to take advantage of the 40% off on the research and or charting courses. So now, let's go into something that I think is fairly important. Let's look at the data that we got first coming out Monday, and then we'll talk about today's PCE. So on Monday, you have the S&P Global Group May manufacturing PMIs at 845. The preliminary report came out early in the month was 50.9. The ISM will release their May U.S. manufacturing sector index. There's a difference between the two, and that comes out at 9. And we get construction spending also at 9, and that's expected to be up 0.1%. Back when you look at March, that was down 0.2. So we'll see what just happened there and how that's going to work out. Now, the big event, of course, was today's PCE, and there was something for everybody. You can look at the spending. The consumer spent a lot less. The consumer made less. But then we looked at the other side of the market where the PMIs were, and they were up a little bit. So I can make an argument either way. You're weakening in the consumer part, but you're still staying up. Now, the whole thing, and people make this very difficult, and they don't get it. When you see a positive number, it's still an increase. Yes, people will tell you, well, last month it was up 0.3. It's down. It's only up 0.2. Okay. Does that mean it's down or up? It means it still went up. What we're looking for is the point where we actually get a negative number where the rollovers happen. Right now, you're trying to judge how much is it slowing. Okay. On Friday of this coming week, we have another big report, and that'll be the jobs report. And the market wants to see unemployment of 4% because they think that will get the Fed's attention. Okay. But I don't see that there's enough here, even in the Fed's attention at 4%, that the Fed, when looking at the inflation, is going to suddenly say, oh, we have to make a move. The last thing the Fed Chair Powell wants, and the last thing I think he's willing to do, is give you a rate cut just for the sake of a rate cut and then have to sit forever and or raise. That he's not going to do. When he makes the cut, it's because he thinks he's in a cycle where there can be several cuts. And as you're watching the Fed speak, and there won't be any this week, they're in the quiet period now, as we get ready for the next FOMC meeting, we'll have an idea. And on that next FOMC meeting, guess what we get? The dot plots. So now we get to see the change of attitude. It's anonymous, but we'll see the change of attitude amongst the members, and the market will go bananas with it one way or the other. That's pretty much how it's going to all pan out. President Biden today came out with a plan for Israel. Israel instantly said, no way. When I looked at it, I don't know what he's talking about. I think he read the Hamas plan that they came out with. And Israel, again, is going to go into a 6-week period where it's peace. After 6 weeks, they'll get some hostages. They want them to pull back from areas. Maybe that's the difference. Not pull out of Gaza, pull back. And during that, they'll negotiate. What did our president, miss? Israel wants Hamas out. I'm not sure they can do that. In fact, I don't believe they can. But that's their goal. And this goal actually lets them stay in power and maybe even negotiate to be part of a new government. How could Israel do that? Hamas's goal is to destroy Israel, and they're going to let a government come with that. So either I missed something or Joe, he can't read. I think it's the latter. All right, let's go to the marketplace. On the S&Ps, you can see how the market is just drifting here sideways. That's not bad action. And in fact, today, I'll tell you, if you take a look at how the market finished, you were down for the week 0.5%. Don't you feel like it wrung more than that out of you? I mean, Dell down 17%, a number of companies down 25, 30%, big names. But here you are, and the index is only down 0.5%. That's impressive. Now, you were down hard. I swear to you, I went outside at 2 o'clock, maybe 1:30, and I took a break, and I said, I'll take a look at the market come around 3 o'clock. And that's what I did. Went in the back. My wife had some projects she wanted me to do in the yard, which I did, blah, blah, blah. I swear to you, from the time I left to when I came back, I'm going, how could the Dow Jones be up near 600 points? S&P up 40 points on the day. And I'm going, what the heck happened? And I still don't know what happened, but we'll deal with it. As you can see on the chart, this is how the week went. And the pattern on the chart is one still of a low that is under this low. This is called a swing line. And for those of you that took my course, congratulations. This is one way to define trend. And most people will tell you, if you're in an uptrend, you have higher highs and higher lows. Downtrend, lower highs, lower lows, and no trend doesn't have that sequence. Well, you've got a higher high and a lower low. That means we have a market that had a vertical price rise, and now it's at the pause stage. Doesn't mean it can't turn back up. In fact, if the market were to take out this week's high and close higher, just higher for the week, it would certainly look friendly. Okay, the key is you can't take out the low first. So this week's low is going to be important. When we take a look at where the market's at, you can see the higher high, higher low, and look at the 18-day average of closes. So far, the market is staying over that. It means the bias is up. I define biases when the market's over the 18-day average. It's either up. When it's under it, it's down. That's the way I do it. If it's on it, it's neutral. When I take a look at Bollinger Bands, you haven't been able to hit the upper Bollinger Band. You've gotten very close, but you haven't hit it. Now to hit it, you're going to tell the guys that said sell May and go away. You got to get through that number. And that's the high for May. And then that theory for them is, well, that they can always come back if you had a break later in the summer. Well, it didn't have to be that exact time. Basically, Yale Hirsch said it basically did. How do I know? I interviewed him on my show a bunch of times. Lower low, higher high. You can see where the market's at. You're a bit overbought right here. Okay, we'll see what that market wants to do over time. I don't see anything exciting. When we look at the Dow, I want you to get used to this pattern. This is when a market decides to spin sideways. Now, it didn't break out over the upper band, and so far not under the lower band. While the trend is up, the bias is down to get the market back into an uptrend. You have to take out this week's high, and you have to close higher on it. Could you first make a lower low and then come up? Well, you could, but if you take out the low here of the 38.66 level, then there's a real problem. So you got to be very, very careful where you're at. what would that be? 38,860, 38. Why don't we just go there? So I can't read it, what it is on the screen. And I'll just take you there. This is what I like to do. So this is the number you cannot get under, 37,866. Didn't make sense. So 37,866, and that's over 100 points away. But if that's taken out, no. Yes, you'd have the support of the Bollinger Band, but you couldn't go back into an uptrend right away. In the NASDAQ, again, sideways action. The upper Bollinger Band stopped the market. You're in overbought territory. In order to say you've got something bigger happening, you obviously got to start coming out to the upside. Otherwise, you're fighting a battle. Is there a trend play here? No, but like the other indices, I got to tell you, if you take out this week's high, you're going to be saying, uh-oh, this market's ready to go again. So I think this week's high and the week before are going to be very important in this market. In the Russell, all we've really done is gone from the upper Bollinger Band. And remember, you stay within the bands 95% of the time. If the bands get real wide, like they did here, you'll meander around after you hit it. But then they start narrowing in. And as they narrow in, think of this. They're compressing energy, and then they come out of them again. That's the inevitable way that they seem to work. Well, you've got lower highs, lower lows, but the bias is up. There's no trend at work there. Now we want to go to the 5-year notes. Well, As long as the market stays under the 18-day average, you should have a bearish bias in the market. Are we trending? You're not. As the market continued to find support against the lower Bollinger Bands, yes. Is it oversold? It is not. Just nothing to do there. 10-year note is the identical picture. So we then go to the dollar index. Now let me explain where we're going to go with currencies this week. There's a debate that the market is having, not me. The market is having. If the European Central Bank cuts rates this week, which is widely expected at their meeting, what does that mean? Is the dollar stronger off of that or weaker? One school of thought is the reason they're cutting, they're going to spur on their economy and you want to get into the currency as it's going to pick up and start moving along, okay? The other school of thought is the economy is weaker, number one, too weak, and that's why they're coming with that momentum. Number two, as they lower interest rates and the U.S. keeps its rates higher, the differential favors the U.S. The question is, now that we're finally to the point, and I use that word very carefully, finally to the point where be it June, be it July, August, a number of central banks are going to begin their rate cutting progress. And as they do against the dollar, is that favorable or not? And this market is trying to gear up to tell us which way. I would say that if you get under 103.96 and a half and a close under, well, actually you don't even have to do that, just close under 104.40, 1.5 for the week. Remember, we're not even into the week yet. That would be a bearish posture in the market. You have an outside week down. If you've taken my outside week course, which is also on sale, taking out this week's high could be problematic for the bears because it often leads to the market going to the closest moving average above it or a Bollinger Band. So I'm watching this very carefully. And we have the same type of pattern hitting in the eurocurrency. We'll find out which one of these are going to do it. In the Canadian dollar, I would view any close over 73.61 as friendly. Right now, you've got the trend up, the bias down, momentum's no longer oversold, but I don't see a play off of that. In the yen, they keep coming out with all kinds of data that gives you reasons why the Bank of Japan should raise rates. But if you get my full research report, I think it was yesterday, I did a whole study for you in that. And I showed you why the bank should not be doing anything right now. They've got to make sure that inflation crosses their target number and stays there. That won't be done if they raise interest rates. They've got to let the impact of these labor negotiations, which are now kicking in, feed the market, create the buying frenzy with the extra money, and then they can look at it. And I'm not the only one thinking that. Obviously, the market is too at this time. In Bitcoin, you have a lower low, higher high. The market had a nice run-up off the Ether ETF approval, and since then, it's sort of just gotten quiet. When we look at the differential between Brent and WTI crude, it's about as neutral as you can get. You're just hanging here at the 18-week average of closes. When we look at Brent by itself, well, the market keeps running into resistance over the past month at the upper 18-week average of closes. OPEC meets on Sunday. What are they going to do? The allocations, how do they deal with some of the countries, such as the UAE, which has spent a fortune increasing production capability, and they're not able to use it. This is all going to have to be addressed in some manner. So we'll see what they do. Some people think they'll say, let's go to the end of the year with where we're at. That isn't going to sit well with those that just spent a lot of money. We'll find out what happens. You got a higher high, lower low, and you're oversold. When you come to WTI, the picture here is a little bit different. Same thing with a higher high, higher low, but easy to take this out. Now, the support in the market has been the 200-week average in gray. You see that one right there? That's going to be the key in the market. If it easily takes it out, you might go back to 72. And let's applaud Joe. Good trades. Now, Joe, it's time to start buying back some crude for our SPR, right? You got the message? Okay, digest it over dinner. Gasoline, lower highs, lower lows. Another Joe move. Why did Joe do that? Well, what Joe did with this move is he said, I happen to have the ability to release 1 million barrels of gasoline on the market. And you're not going to see high prices going into this election. And by Jove, he's done it, okay? Let's give him, that's what the president has. The president has power. He's a fool if he doesn't use it. He's used it, and he's killed the idea of the summer driving season so far. The word is so far. Get over 58.30 on this chart, and then you got to wonder, is he losing control of it? Remember, then he can release more barrels. He knows, or his staff knows what to do with that, and they'll do it. Now, one of the things that we have for you, and a lot of you need this, is our guide to technical indicators. And just take a look. This is volumes 1 and 2, and they come to you as a PDF. Price charts, the different types of charts, candlesticks, line charts, bar charts. There's all types in here, and they're explained with a lot of detail so that you get to work around it. Next, chart patterns. Patterns are very important. Do I trade off patterns? No, but I know them and I pay attention to them. Trend lines. Well, if you think about trend lines, that's what I use in my swing line. I take it a different way. You always hear me talking about slow stochastics. That's oscillators. Now, some traders like to follow what's called market sentiment. It was very, very popular years ago. A lot of traders still swear by it. I've never found it useful, but you should know what it is when people talk about it. Then something that has stayed popular over the years that I've never mastered is GAN. It's hard, okay? And that's because there's so many ways that the analyst goes about it. Well, it's going to do this if it does that. And it's crazy. Elliott wave theory is very important. You should know that because it happens all the time. You see it. But to me, it's not a leader of what's going to happen. It tells you where you're at as it's happening, Fibonacci counts and the like. Dow theory, of course, you want to understand all that. Spreads, the difference between the markets. All this is so darn important. The Arun indicator, which is price-time relationship. We have that on our site, a whole course on it for free for you. Option primer, a lot of people use options. And if you don't have money management, you have nothing. So you can be the best trader in the world and go broke on one trade. You can't do that. So you got to figure out money management. Just go to iraepstein.com, free offers, guide to technical indicators, or move your cursor up here. You'll see an icon. It'll take you there. You have a great weekend. It's going to be beautiful around America. And I will catch up with everybody on Monday morning. Take care.